All right, perfect. Sorry, guys. All right, so today, what are we here to talk about? Happy Pride! It's Pride Month. Woo woo! We hope that you have a lot of wonderful goings on this month. There's a lot to celebrate. There's also a lot of work to still do, right? The theme for San Francisco's Pride this year is resistance and action. And what better way to resist than with your dollar bills, y'all? So, here we're here to talk about having purpose in your portfolio so that your investments can reflect your values and support companies that do good by the communities you care about. So, we're joined today, and let's go to the little disclaimer. So, read, while you read this or not read it, I'm going to introduce our hosts.
Please don't read this to me.
No, I'm not reading that. You can read this while I'm introducing our crew for today. We've got our special guest, Morgan Duplessis from Ethics. She's our lead relationship manager, and we're thrilled to have her here with us today. On the Brio side of things, Brio's founder, Brandon Miller, who is so very proud of his Brio Baby Pride portfolio. And also joining us, Associate Wealth Advisor Gerald Antonios. If you don't know him, I'm so sorry. That's a huge loss. He is a perma ray of sunshine. And all while being loud and proud, both for his community and on the tennis court where he shines like a diamond. So,
Oh,
uh, so with that, have you really ever given any thought to your portfolio through a values lens? Right? We want returns, right? We want to compound those returns over time. But things have evolved to a point now where you can really focus your efforts um, and your dollars on things that are important to you. So you can take a look at your identity, where that intersectionality is. You can have a sense of ownership, and you like true ownership. We'll talk about that later in the presentation. That really is reflective of your values. So you don't feel that you've compromised anything in your investment portfolio. And again, this is an open conversation. This hour's for you. Pop any questions in the chat, shout them out. We're here to help. And again, we're thrilled to have Morgan here who kind of knows the down and dirty details of the ins and outs of how Ethic helps Brio do this. But I'll now pass it over to Gerald.
I'll go ahead and take it. Yes, yes. Happy Pride, everybody. It's June here, and the city just comes alive. So we have a lot of pride here, and it's one of my favorite months, but it's very, I guess the word's apt that we have this presentation today um, on ESG and our Pride portfolio. Why does all of this matter? Um, some of y'all, if you think a little back, you think of the Stonewall riots, like right in the late 60s, early 70s. You think of like HIV and AIDS movement here, especially in San Francisco and New York. A lot of what we had to go through for that, and like gay marriage, and then it becoming legal in 2016 under Oberfell versus Hodges. So there was a lot of grassroots movement there that a lot of us here on the call probably participated physically on the street. But maybe now we can't really, we may not have time to do that. Um, but we're still heavily involved, and it's something that's deeply rooted in us to continue and support. So these are the things that matters most to us, and this is, ESG and a Pride portfolio is a way of us continuing to support those causes, but maybe I like to say vote with our investment dollars. So this is why it's a conversation that matters to me personally, but I'm sure it probably resonates with a lot of our guests here today. Um, you know, in this process, we want to align our beliefs. Again, we're using our dollars to go, oh, okay, yes, Jeff. Uh, yeah, so ESG stands for environmental, social, and governance. Those are three pillars within the ESG movement. And we'll go a little deeper into that a little bit later, but um, that's what that's all about. So again, we're going to be investing and voting with our dollars. It's another way for us to express our intention, um, maybe put more intention around our investments. I think a lot of folks leave it to your advisor to like recommend uh, what I should invest in, or how should I allocate my portfolio, the asset allocation, and kind of leave it to the advisor because they have the expertise. But these types of portfolios, ESG and the Brio Pride portfolio and Ethic, which we'll talk about later, really gives you guys the ability to add your voice to the portfolio, um, and give it a little more intention that's more focused on you. Also, this platform that we have and the products that we have will give transparency um, around like what you own within your portfolio, and it's just not some random ETF that you've signed up for through like BlackRock. But there's intentionality and transparency around what you own.
And since we are so guilty of slinging around acronyms like everyone knows what they are, thank you, Jeff, for calling that out. So, what's an ETF, Gerald?
So ETFs is like, I think of it as like a basket of companies, of shares of stock that you have in a basket that these portfolio managers have wrapped into one product. So it stands for exchange traded fund, and it's a fund that has all sorts of companies in there. Um, Diversified through many sectors. And it's something that you'll have in your portfolios. We like them because they're very diversified, and the cost of those ETFs are typically lower. And we like that, low fees. So, yeah, so
Okay.
we will have a lot of ETFs.
Okay, perfect. All right, next slide.
Yes.
Perfect.
Quick interruption. I would think of an ETF like I think most people are more familiar with index funds. Same investing concept, but mutual funds they're just a little older. The newer version, if you will, is an exchange traded fund because they actively trade like a stock as opposed to trading like a mutual fund, and there's some small benefits to that. Okay, back to you, Gerald.
Yeah, yeah. So the money that we have, we want it to reflect our values, right? Um, so within the Brio Pride portfolio and within the Ethic program, there's ways to um, customize what you'll have in your portfolio. Here on the screen, you can see a couple things that you would be able to customize and screen out of your portfolio. So here, fossil fuels, like say like Chevron, you're against that type of product. Weapons, I think here we can help you screen that out. Oh, I don't see anything.
We're just talking about the
Um,
slides, Jeff.
Right. Where are the slides?
Are you not seeing a slide that says money reflects priorities?
I do not see that.
That must be a view issue on or setting that you're currently on your Zoom, Jeff.
Can other people see it?
Yes, if you go to the top of the screen, there are two tabs, and if you go to the one that says Shannon Kennedy's screen, it should show you the
Ah,
slide.
there it is.
Excellent. Thank you.
Fantastic. Um, so another screen we have is weapons. And, when we think of weapons, we're like, kind of like, what does that, what do you mean by that? Your advisor can kind of help you drill down in terms of screening out weapons. So, for example, a lot of us here may have heard of Honeywell. They're known for like their thermostats and their climate control systems within homes. But Honeywell, they have a lot of subsidiaries underneath them that are focused on um, tactical guidance systems for weapons and missiles, which, probably the average consumer may not know, but your advisor can certainly drill down and help you screen that out for you. Predatory lending is another area that we look at. This I would think of like countrywide mortgage. Uh, Folks might remember in like 2009 when Countrywide was like doing all those subprime loans. Uh, so, we could screen stuff that out. Anti-LGBTQ lobbying. So this is when companies like State Farm or Home Depot, they support through their dollars potentially political figures or campaigns or what's that group called? The Family Wealth Council of America. So possibly some lobbying campaigns that may not align with your values. We can drill down and screen that out. And then lastly, like poor labor practices. I think when it comes to that, we can think of like when Amazon and their workforce, the labor practices used at their distribution centers, I think has been in the news lately. Um, so these are different areas that we focus on, and there's a whole list of other things, but these are pretty much the major ones um, here for us to consider.
Yeah. So like base
Is it
traditional
aligned? Yeah,
investing is going to just de facto usually contain those things. But the good thing is you can
yeah,
exclude them so that they match your values.
yeah,
All right.
exactly. So go to the next. Yeah, so here, as you customize your portfolio, we definitely want to avoid some things that don't align with your values, whether it be LGBT values or human rights or environmental. We can exclude those out. We can really drill down, but we want to keep part of your portfolio exposed to companies that you support and do align with your values, um, and that create a positive impact for you. And then lastly, there's a way for us to not only vote with our dollars, but also do proxy voting. Uh, does anyone here know what proxy voting is?
Well, the good news is we have a big juicy slide at the end that Morgan's going to highlight the ethic impact of proxy.
Oh, okay.
So spoiler alert,
Fantastic,
more to come.
fantastic. More to come, more to come. But in a very, very small nutshell, proxy voting, like for me, I don't know about you guys, but I get all these emails that are like, hey, voting's coming up, your proxy voting's coming up. And I usually delete those and never pay any attention. But what it really has to do is like the governance of these companies. Big issues come up, and people who own shares in these companies are asked to vote on different issues. Now, y'all are all busy. You don't have time to vote on all these different issues. So with the Ethic platform, they make it easy for you to vote based on where your values align. And they'll explain that more to you later.
All right, excellent. So we've been talking about all sorts of acronyms, buzzwords. Gerald here's just going to sort of wrap it up for us in terms of what the ESG component really means.
Yeah, so again, we're just focused on environmental, social, and governance. The different companies, how each company deals with those three types of areas, and how it's run, especially in the governance portion. We look how people are treated in the company and how that company is interwoven with the community, whether it helps the community that it's in, or it's really not helping them in different ways. And then lastly, we want to focus on how a company impacts the world, the natural world around it, both locally, domestically, and internationally. So these are all different areas that your advisor can help you understand with the things that you're investing in. Um, so yeah, definitely reach out to us in terms of your portfolio and have that conversation with your advisor with where your values align.
Yeah, because we know you care. Brandon, what do clients care about these days?
Making money and not supporting evil people. Like just to be clear. So, I'm old enough. When I started, we called this socially responsible investing back in the day. Now we call it environmental social governance investing. Maybe, I don't know, Morgan, there's probably like even something smarter, but you can fill us in. But when I started like 20 whatever years ago, some of us like shied away from it because it felt like saving society or the earth or whatever was like very secondary to like making money. And what's super cool is in today's world, like there is no difference between the investments, right? So to me, I'm always approaching this as like investments first, save the world secondarily, but they can coexist very peacefully. Part of that was, frankly, all of the socially responsible investments cost so much more money than regular investments did, if you will. And this is a really cool thing, is just like with technology being what it is and doing what it does, the thing we're talking about today, now most people can afford to do it. Okay. So and really when it started off, I mean, even 25 years ago, there were people who could do direct indexing, but you had to have like $10 million to open an account. Today, it's a much easier situation, right? It's just with technology, we can take it to more people at cheaper rates. So anyhow, what I think people care about is I want to make sure I have enough money and I don't want to be evil with my investments, right? Some people are like super specific about what they care to exclude. Like every now and then we'll get calls like, hey, I sure as hell don't want Elon Musk in my portfolio, or I want to make sure X is not in there, right? Or like my mother died of lung cancer and there could be no RJR in there. So anyhow, some of that happens, but on the whole, I think a lot of us are like, look, I just want to make sure I'm doing right. So oftentimes I'm talking about regular portfolios and like get into heaven portfolio. And it can be that simple. You want to go to the next one, Shannon?
Well, I didn't know that Brio offered a Get Into Heaven portfolio, so that's
Hello, have you met me?
That's great.
Um, um, So, uh, at the core, let me give you an example of what we're actually talking about that I think usually helps people understand stuff. So, a lot of you will have an S&P 500 index fund or exchange traded fund in your portfolio, right? So, you own essentially a mutual fund, if you will, that turns around and owns 500 big US companies. And what we're doing is we're like going in and saying, hey, these 200 companies or whatever are not great. I don't love how they go about making their money. So we get rid of the jerks, and now you've got 300 companies and you own them directly, right? So we're going a layer deeper in terms of the granularity of what you own. And by owning the companies directly, we're able to get much more specific as to who we get rid of and why we get rid of them. Okay. So how we does that, hopefully that makes sense to everybody, but it's still a passive passive form of investing. We're just getting rid of the jerks. Okay. Now, we've got two options. What we're mostly talking about today is the Brio Pride strategy, where Brio has gone in and kind of defined the jerks, if you will, in this case, right? We spent some time and energy going through and defining what our pillars were of the values that Brio as a company cares about. And that's kind of what you're looking at on the screen here. Okay. It's not a shock to most people. And when I go through and explain it, 9 times out of 10, my client says, yep, that's what I care about, and that's why we work with you, right? And so there's this pretty easy solution that I do feel really proud of, this thing that we've created. It's basically like your very own personal gay-focused mutual fund. Shouldn't even say gay. Frankly, it's more about like social justice issues
Yeah.
than anything, as you can see. Yeah. Um, now, there is a secondary offering, if you will, or option, which is like, love you, Brandon, love Brio, but I'm me. Let me be me, right? And so it's pretty darn simple. You take your own values quiz and you spend, 5 or 10 minutes on it and say, I love the trees. I don't really care that much about, I don't know, whatever, gay rights,
Whales.
whales. Forget the whales. Yeah, I don't know, whatever. Um, uh, and that way, it literally you're creating your own fully custom portfolio based off like what you care about. And I think that's so cool. I'm doing some, I don't know what all we have in here for the next slides, but just to be clear, the downside to this, I'll go ahead and say it, is it does cost more money. Okay. But not much more at all. So part of the problem is the way we have most of your portfolios currently positioned, we are at dirt cheap pricing. Okay. So the investments, if you will, the products inside of the normal portfolio, I'll say normal portfolio for most folks at Brio, it's about a 0.17, 0.18% expense ratio. Okay. That's what the investments cost inside of there. The average in the industry is closer to like a 0.8%, right? So we already have you like dirt cheap. This costs 0.25. So we are going from like dirt cheap to cheap, right? It is more expensive, but it's still way cheaper than what a lot of the other investments in this industry cost. That literally is, in my opinion, the only downside because everything else on average will stay the same. Risk tolerance will stay the same. Rate of return will stay the same on average. Okay.
So are
Um,
we talking about like $2,000 more
yeah. Okay. Thank
per
you for,
million?
yeah. So for every $100,000, you're talking about an extra $80, right? Or
Right.
for $1 million and $800 in cost. And what I try and get people to see is like, hey, if would you donate $80 to your favorite nonprofit or 800 or depending on the dollar value? And usually when you do the math, it's like, okay, yeah, I would probably be willing to donate that because I do see this as like it absolutely has an impact. And part of what Ethic is able to deliver is you can actually see the impact. They'll track, like, given how much money you've invested in what you're doing, this is how many metric tons of CO2 you've saved the planet, or how many, like, whatever the metric is that we're following. There's lots of different ones to show you, like for you in particular, in your dollars, this is the impact that you've had. Super cool. Um, okay, I'll shut up.
Okay, because I think we're going to let Ms. Morgan tell us exactly how they do what they do.
Yeah.
Great. Yeah, great. Well, it's great to see everyone. Thank you for including me on this lovely webinar. And happy Pride. So figure I would give just a super high level overview of my background to give you all some context of how I even ended up in this space in the first place. But I'm originally from Haiti. I was born there and raised there as well. And I grew up under a very turbulent social political environment. I saw a lot of things that most people don't see in a lifetime, and my family ended up fleeing the country when I was 8 and moved to the States. So I had a very deep understanding of, the ugliest parts of the world, and, everything from all types of social environmental issues. And that was very much the catalyst for why I wanted to build my career in this space. I thought about what that would look like. Was it humanitarian work? Was it this? Was it that? But I was introduced to the concept of, sustainable and impact investing when I was in college and became really interested in this idea of being able to use, your investor dollars to address different social, political, or social environmental issues. So just some background on me and how I ended up here. In terms of who Ethic is, the highest level, we're an independent asset manager. We're focused on delivering personalized, values aligned, and tax managed direct indexing portfolios to financial advisors and their clients. So we partner exclusively with firms like Brio to make these solutions available to investors like yourselves. Just a quick snapshot of where we are today from a numbers perspective. We're currently managing a little over 9 billion in assets. For context, when I started in October of 2021, we had just hit that $1 billion in assets under management threshold. So we've grown really significantly in the last 4 to 5 years, and something we're very proud of. And, all of that was through working with clients that are very, passionate about certain issue areas and want to make sure that those issue areas are reflected in their investment portfolios. Can go over to the next slide here. So a little bit more on our portfolio construction process. Brandon did a great job of kind of explaining what direct indexing is. Really what we're looking to do is, we talked about the definition earlier of what an ETF is. What we, are doing is, you can think about it as unwrapping that ETF and being able to look at the individual companies within the ETF to determine whether or not they should be in your portfolio based on the issue areas that you would like to prioritize. So moving from left to right, the process starts by first analyzing the complete universe of securities. So we used the example earlier of the S&P 500, the largest 500 companies in the US. Basically, what we're doing is we're looking at the S&P 500 and seeing, okay, based on the issue areas that the individual client is prioritizing, which of those companies do or do not align with your values. That then shrinks down the investable universe to from 500 to, let's say, 300. Like, to use Brandon's terminology, we're getting rid of the jerks. Once we've done that, we are looking to we use an optimization process that essentially is going to balance the different trade-offs of the client objectives and the inputs that we align on at the beginning, to determine how we're going to build a portfolio using those 300 clean or investable companies in a way that's still going to allow us to mimic the financial profile of the overall S&P 500 and allow us to track the S&P 500's financial performance. So going back to that point of ensuring that, we're not necessarily quote unquote sacrificing performance, which is, one of the major concerns with this type of investing. And then ultimately that brings us to the Ethic portfolio. And I will say one thing too, is we've alluded to this a little bit. There's 3,001 different terms that people use to call this kind of investing. Some people say ESG, some people say sustainable, socially responsible, etc. What we really focus on at Ethic is values aligned investing. We're not in the business of imposing our values on you. We want to make sure that you're in the spotlight of your portfolio and can determine what issue areas you care about most.
Love it.
Can go to the next slide here. Okay. So a little bit on what makes Ethic different from some other providers in the space. I'll start off by saying that, we were very intentional in choosing the type of investment solution to be able to do values aligned investing. We intentionally chose direct indexing because it provides that level of flexibility to have more control over how the portfolio is managed, what are the issue areas being prioritized, and what individual companies do end up in your investment portfolio. We talked a little bit about some other investment solutions in the space, like ESG ETFs and mutual funds. And while in some cases those can be great options, there are a couple of drawbacks. The first is you don't have the flexibility to determine how are we thinking about, companies that should or should not be in the portfolio. There's not a ton of transparency around what data providers they're using to assess company behaviors across different social and environmental issues. And then there's no, impact reporting. So being able to say, by investing in this mutual fund or ETF, you have had this impact on the issues that you care about. So first and foremost, that's kind of the benefits of using a direct indexing values aligned solution is having more flexibility, having more transparency, and having that impact reporting piece, which is really important to clients as well. On this slide here, I'll just give like some context on our process and methodology specifically. So we have an in-house sustainability research and data team. What they did at the onset of our business is they analyzed the world's most pressing social environmental issues from a systemic standpoint and distilled them down to what we call the 16 ethic pillars. So these range from climate change to human rights to leadership and management, and a combination of 1 to 5 of these is at the base of the ethic portfolio. Um, like we've talked about already, we worked very closely with the Brio team when we first started partnering to establish kind of their house view firm branded strategy that incorporates 4 pillars that are reflective of the values of the firm and then generally the shared values of the clients of the firm. But we do also have the option of doing, a custom to client portfolio like Brandon was mentioning. And we do that through our values mapping exercise. It's a short 5 to 10 minute questionnaire where you can identify the specific issue areas that you would like to prioritize if you want something that is more personal than the Brio Pride strategy, for example. We also have a tool called the Health Check tool. It's a diagnostic tool that essentially can look at your existing portfolio and determine what companies do you currently own that are actively going against your personal values and the issue areas that you care about. So that's a really powerful tool because it helps you to kind of reframe and rethink about your investment portfolio and what it looks like currently. And in tandem with that comes an ethic portfolio proposal where we can show you, here's how we can transition you from the current state of your portfolio versus what an ethic portfolio that is tailor-made to you would look like.
Hey, Morgan, quick
Yeah.
interruption. I feel like when we're looking at health checks, and honestly, we don't do them a ton, but so maybe not a great sample size, but I feel like it's often like 30 or 40% of people's portfolio is not what they're wanting. Like, is there
Yeah.
like it's pretty dramatic usually how bad their current portfolio is.
Yeah, and that even like it will depend on, for example, the stringency of the strategy
Yeah.
itself. So if we create, the Brandon Miller impact strategy and you select that you want to be very strict on certain issue areas, then when we run that health check, more of the benchmark will be flagged.
Right.
If we were taking a lighter approach to the stringency of your strategy, then, less. But yeah, generally speaking, it could be anywhere from, 10 to 60% of the benchmark is flagged for one or more reasons. And then in terms of the sustainability model, we have a really robust process around data aggregation. So we work with 10 to 15 different data providers in the space, in the ESG space, that essentially the way we work with them is what sets us apart from other players in the space. We are ingesting their raw data, which represents over 4,000 different data points, which allows us to get very granular on company behaviors and be able to assess how a single company is behaving across the board of all 16 of our pillars. And then another piece here around tax management and values, the secondary, benefit of a direct indexing solution is it gives us the ability to tax loss harvest in your portfolio. So really, that process essentially entails as your, portfolio is appreciating and your capital gains are continuing to increase, we have the ability to essentially use the losses in your portfolio to offset those gains. And we report out on that as well to show you what has been the tax benefit of us doing that, kind of year to date and over the lifetime of the portfolio. So those are the two benefits there, being able to get you closer to your values alignment and also while mitigating your tax bill, essentially.
Um, Sorry, another quick interruption. Just so everyone understands, one, with tax loss harvesting, that's only going to work in non-retirement accounts, right? Inside of retirement accounts, we don't really care about that. But in those non-retirement accounts, this increased ability to tax loss harvest, or like better tax alpha or tax efficiency, if you will, that often, no guarantees, but often that will more than compensate for that small extra cost that's embedded in there. So it really is like a total slam dunk in non-retirement portfolios.
Yeah.
Brenda just used a sports reference. Wow.
Thank you. Appropriately, even.
I know.
Feel like because the World Cup is coming up, that was your opportunity to use maybe a soccer reference, but
I shut up. Sorry.
okay.
Next time.
And then the last piece here is reporting. So I mentioned reporting a couple of times, but we have really robust levels of reporting on an account by account basis for each individual client, which will show you obviously the performance of the portfolio, but it will show other levels of reporting as well. In the case of taxable portfolios, it'll show you your tax reporting, impact reporting, which compounds over time, which is going to show you the impact your portfolio is having by reducing your exposure to some of those negative companies in the benchmark. And then also, one of the other buzzwords today, proxy voting reporting. So it'll show you what are the issue areas, or sorry, what are the proposals that we voted on? Why did we vote the way that we did, etc. Okay, we can move on to the next slide here. So I thought it would be helpful to zoom into, given the topic of conversation today and it being Pride Month and the Brio Pride strategy, I thought it would be helpful to zoom into our LGBTQ justice pillar specifically to give you more context on how holistically we're thinking about these issue areas. All 16 of our pillars, there's really, so to speak, no stone left unturned in terms of all of the different angles that we are thinking about these issues through, and ensuring that we can get, as granular as possible on, aligning your investment portfolio with your values. So as it relates to LGBTQ plus justice, the typical industry approach, there aren't really that many investment products that are focused specifically on LGBTQ plus. But where there are some, they mostly maybe try to seek to identify certain companies that have it's a tongue twister, LGBTQ plus executives or inclusive workplace policies. The way that we think about it, we're going, above and beyond thinking about what issue areas are relevant to this community. So there are three buckets here that you can see. First and foremost, is we're assessing impacts of consumer products on the community. So in terms of, you see a couple of examples here. Firearms, we think that's a really important consideration because firearms exacerbate the harms of hate crimes and also contribute to high rates of death by suicide among LGBTQ plus youth. So we think that's a very relevant, screen to include in this pillar. Another example here is around social media content moderation. So specifically, LGBTQ individuals experience high rates of various forms of online victimization, which can obviously have extremely detrimental impacts on mental health. So we really want to pay attention to companies that have strong content moderation policies. That way we can help reduce the frequency or, because those, having stronger content moderation policies can help reduce the frequency of, these incidents. So another consideration there. The second bucket is assessing impacts of workplace policies and practices on, the community, particularly around, one of the considerations there is LGBTQ plus workplace standards. So workplace discrimination, harassment are very common experiences for LGBTQ plus workers. So, we're really paying attention to companies that can help reduce discrimination towards the community by having LGBTQ inclusive non-discrimination policies and employee resource groups. So some of the considerations that we're looking at when we're looking at the internal governance of a company. And then the last bucket here is, assess other systemic impacts on the community. So there's an example here around, prisons and border detention. Why is that relevant? So, LGBTQ individuals are incarcerated at higher rates than the general population. And while incarcerated, they're more likely to be victimized or experience solitary confinement. So again, all of these examples to show you how holistically we're thinking about this issue, and managing the portfolio accordingly. Okay. And then here we have basically a, comparison, a sample and illustrative comparison of, the benchmark versus the Brio Pride strategy. So the benchmark here, the Brio team had identified a blended benchmark that includes both US-based and international companies. So that's the benchmark that we're working with. And if you see, a comparison under the sustainability section here, there's a comparison between if you were just, investing in the benchmark without any type of values alignment overlay versus what it looks like through the Brio Pride strategy. So as it relates to diversity policies and practices, you can see 46 companies are flagged within the benchmark for having poor diversity policies and practices versus 0 being flagged in the Brio Pride strategy portfolio. The second one here is predatory lending revenue. So you can see in the benchmark, or the benchmark represents $3.8 billion worth of predatory lending revenue, versus 162.7 million in the Brio Pride strategy portfolio. And then the last piece here is the carbon emissions ownership comparison. So this is saying that the benchmark has a carbon emissions ownership of 12 metric tons versus 5 metric tons in the Ethic portfolio. The last section here is showing basically what we call impact equivalencies. So what does that difference in seven metric tons of carbon emissions ownership represent? So it's almost 17.6K miles driven, almost 800 gallons of gas, 1 home powered for a year, and 16 barrels of oil. This is usually where we see, clients and investors get really excited because they're able to quantify and visualize the impact that their portfolio is having by reducing their exposure to some of those negative companies in the benchmark based on the issue areas that they care about most.
And it's cumulative.
Yes,
Yeah.
Just like
exactly.
everything else we do in this life. Like you start small, whether it's you're adding money to it or like as time marches on, you just keep helping and benefiting more and more and more.
Yeah,
Mhm.
we love a relatable data point.
Yeah, exactly. And then the last piece here is around proxy voting. So, we vote on proxies on behalf of all Ethic clients, which essentially means, or rather, we have built out our own custom proxy voting guidelines, which are in line with the considerations of our 16 sustainability pillars. And those are the guidelines that we use to inform how we are going to vote on different proposals. So, an example of an actual proposal that we voted on, Apple a couple of years ago put out a proposal to their shareholders on whether or not they should report on their median gender/racial pay gap. Their management voted against it. We voted for it because obviously we want to push them to be more transparent on those issues. So this is another aspect of our reporting as well. We always report out on all the proposals we voted on, why we voted the way that we did, whether we voted for or against management. And really the thought process for proxy voting is even though the investment portfolio itself, we are screening out the bad actors based on the issue areas being prioritized. At the end of the day, no public company is perfect, and we really want to push them to be the best corporate citizens that they can be. So even for the companies that do end up in your Ethic portfolio that are considered clean or investable, we want to push them to be more transparent. We want to push them to think about these issues through more of a social, environmental friendly, lens. And basically push them to be better.
Love it. So, Brandon, how cool is it?
That's pretty darn cool, Shannon. Um, uh, I don't know what to say. Well, I'll start here. Well, okay, so the accessibility factor, I do think that's a thing. I want to make sure. So the minimum initial investment is $250,000 for us to do this with, to be able to do this, and it's actually per account. So you might have $300,000 at Brio, but 200 of it is in an IRA and 100 of it is in a non-retirement account, and then we wouldn't be able to do this. That said, that probably means if you're on this call, right, or you're talking to somebody who cares about it, there are other things, right, that are just more off-the-shelf solutions. So if you care about this, you should talk to your advisor about it, right? Like we have lots of solutions. But like I said, when I first started, I actually think it was 20 million when I first started that I had to have in order to be able to create an account like this, a direct index account. So the fact that we're down to 250K is so cool to me. So very accessible. Um, the thing about I don't know. Maybe this is just me personally, but I feel like there's so much chaos and crap happening and like bad, ugly things happening at the moment that I personally get a little frozen. Like I don't even know where to start or like what to do in order to help or how to help or who to donate to or whatever. This feels like such an easy solve to me, right? The truth is like you're investing your dollars, every dollar does matter, right? You think about like I love this Margaret Mead quote. Shannon was making fun of me for it, I think, but I love it. Because it is the only way. Like I think like we all have to do our little piece and like cumulatively, right? Now Ethic has $9 billion. And when they actually vote, your proxy, like it has a voice, right? And it's beginning to to be a really loud voice. And so I think it's a really lovely, easy way to do good with your money while making money. So
Yeah.
I think it's cool. Question. Okay. Doug, so could we diversify by allocating some money to the private portfolio and still keep money invested in the regular Brio portfolio? Absolutely. Yep,
Yeah.
totally.
I will share, I did make fun of Brandon from Margaret Mead because I was like, that's pulled that out of nowhere. Apparently, she would, for those who don't know, she was a cultural anthropologist, but also an openly fluid bisexual woman. While the public rarely discusses her queerness due to historical erasure, her personal and professional life was deeply shaped by her attraction to both men and women, and she was an outspoken advocate for sexual fluidity and the queer community.
Go, Margaret, go.
Yes, go Margaret. All right. Any other questions, folks?
Hey, Brandon, how often for the pillars for the Brio Pride portfolio, how often does the investment committee kind of review that or maybe rejigger it a little or
Honestly, we haven't, right? And it's been several years. I'm not sure that it would really change anything. Like you were saying, Morgan, like it was
okay.
pretty thorough to begin with, right? And so I don't really know. I don't feel like who Brio is has changed in that time period, and I hope that it doesn't change, frankly. So, like, I don't really know that that's going to change. Like, the investments inside of there might change, right? Like what Morgan and crew do with our values from there might get tweaked, right? But the values themselves,
Mhm.
like, still the same.
Yep. Nice.
Yeah.
Do
Other
the-
questions, Doug?
So do the so I sort of am at that point where it takes a while to get used to having a financial advisor, and the trust in the relationship is built over time, and I think that's a wonderful thing. So now there's like a lot of stuff that I see pop up like, oh, we've traded these shares, or here's some disclosure about something else. Is the basic way that the Pride portfolio managed pretty much the same? That same sort of kind of behind the scenes, we're looking at things all the time and rebalancing investments. And if so, like what oversight does Brio have over that, if any?
The first answer would be yes. Oversight is kind of the same as we do over anything else. So it's like I really don't consider the investments themselves to change. Like if I think about like our core investment philosophy and like our expectations around like rates of return or the risk levels that we're taking or how we would rebalance or tax loss harvest or any of those things, I consider them all to be the same.
Perfect.
How we get like the end result is different maybe, but like how we go about there, but the end result's always the same. It literally is just like do we want to apply this like values based overlay on top of it, or do we just want to be completely agnostic about who we're investing in?
Makes sense. Thank you so much.
Yeah. I mean, like to be clear, like I normally am starting the conversation with clients just saying like, hey, do you care at all about the values, like how we're investing your money, or do you not care? Like it's as simple as that, right? And I think what's cool about it is when I start talking with clients, it gets a little, it's again, I get a little frozen sometimes, I think, because it's like, of course, there's all these things I care about, but I don't
Yeah.
know how to like prioritize or quantify. And I sure as heck don't know how to like translate that into an investment, right? I barely understand investments to begin with, let alone like all this values intersection. So it's cool because to me, this is a very easy to understand, simple solution from the consumer's perspective.
Mhm.
Behind the scenes, it is it is very impressive what's happening. I mean, the times I didn't even, Morgan, you'd have to tell me. I don't know. There was one time we were meeting with one of your experts on like going like really peeling back the onion layers. And I was about 12 seconds into, I was like, oh Lord, she is so over my head in terms of like all the different ways, right? That the impacts of like what can happen, even just with like looking through the like the LGBTQ lens, all the like I don't think about prisons and how that was impacting
Mhm.
my people,
Yeah.
right? But like, so anyhow,
Yeah.
it's very impressive.
I think the intersectionality is one of the coolest parts. I
Amazing.
know Ethic has a ton of wonderfully visual charts that
Yeah.
show, just where all these things do come into
Yeah.
contact with one another, so that you can be so thoughtful about that and intentional, is really empowering.
Yeah, and I was going to say that, when we go through this process with clients, whether it's, through the Brio Pride strategy portfolio or a custom to client portfolio, we're very hands-on. Like I always say I'm always happy to hop on a call and really, go into the weeds as to what is it that you're seeing, and being able to put everything into context. And then exactly the client experience of our portfolio proposal process is meant to be very user friendly, very digestible, where we're able to distill all of these big, topics and commentaries and philosophies and thought processes into little sound bites that are easier to, you know, understand and mull over.
Unless there's other questions, I would say I have like one last plea, which is, as hopefully for any of us that like that care, like you actually have to do something, right? Like activism is an active process. You have to do something, right? And so honestly, like, and Morgan, you kind of talked about this just a hair, but like this is a really unique, rare thing that we have. I don't know, Shannon, you should probably like go national with ads or something around this product itself. But like, I know that's not who we are, but truly, this is really cool. Like anyone who gives a shit about social justice in general should be doing this. And it's a very easy thing to do.
Yeah.
So
Well,
do
and the
something.
fact that the impact compounds monthly, well, daily, hourly,
Yeah,
monthly,
yeah, right.
annually. I mean, for
Yeah.
those who are charitably inclined, either with their money or their time, it's a good comparison. Like, do you want to just give one big check at, donation at the end of your life or at the gala that one year, or do you want to just support them all day, every day, all year long, right?
Hmm.
Exactly.
Yeah. Oh, and the last thing I should mention too is we're always available to basically run portfolio proposals for you. So if you just want to see what this would look like in the context of your portfolio and your values without having to make any decisions or commitments, we're happy to do that.
I think that's wonderful. I think that'd be a great exercise, not just offering it out to the, the world at large, but for those who are thoughtful and mindful. What a great exercise, just because I'm sure there are things that, as Brandon said, are uncovered in that discovery process that weren't really top of mind.
Mhm.
All right. Well, hopefully this has inspired someone to at least take the exercise. Reach out to Brio at large or your advisor, and we can connect you with the peeps at Ethic. And as always, thank you so much for joining us, spending an hour with us, and hope to see maybe Doug. Are we going to see you for Pride?
I think I'm out of town that weekend, unfortunately.
Oh, well, then you're doing retirement right. We love to see that.
If not, I'll come by for sure.
Okay, sounds good. All right. Well, thanks everyone. And special shout out to Morgan. Appreciate
Of course.
you so much. And you really take a difficult, meaty topic and make it very accessible. So appreciate that about you.
Of course, my pleasure. Always happy to support and help however I can. It's been such a pleasure to partner with Brio and all of your clients. So yeah, it was a pleasure, and I'm glad I was able to spend time with you all today.
Thanks.
All right. Bye,
Thank you.
everybody.
Bye, buddy.
Bye.
Thank you.